Well, hi, Doc, and welcome back to another episode of the Money Mentor podcast with Chief Economist Dr. Andrew Wilson at My Housing Market. And it's good to have you back again, Doc. And how's everything been going? Good to see you again.
Yeah, good to see you again. Another week goes by, and of course, we're now into May. Can you believe May? I keep saying that. Can you believe April? Can you believe March? But we are into May. I think it was a public holiday up there in Queensland.
Correct. Yeah, we had a long weekend just recently. So public holiday on Monday, short week.
Yeah, so we've come through a month, 6 weeks really, if you think about Easter, because Easter was at the end of March. So 6 weeks of holidays across the board. So it really has been April, the holiday month, sort of moving into May, but things will settle down now as we move through the back end of the autumn selling season. And that's the second and last phase. And that sort of moves up towards what we used to call the Queen's birthday weekend. And I suppose that's the King's birthday weekend now, of course. And that brings us up to sort of the end of June. And that's when we move into our quiet period, which is July and August, where the housing market takes a bit of a snooze. But it's been a good start to the year generally. More reasonable results last weekend in our auction market, which we'll look at the end of the show today. But of course, the big news this week is the Reserve Bank, and we'll look at the results from the Reserve Bank. A little bit of a ticklish environment for the Reserve Bank with the latest data over the last month. Not just Australia, but elsewhere. There's been a lot of chat, which I think has been a bit ahead of the game about cutting rates. I think we're a long way from cutting rates, just my opinion, and the latest data has certainly justified that. So, Glen, My Housing Market is my brand, our brand. We deal with commentary and data for the housing market, and our little saying is current state and future prospects of your housing market. And we are all about the current state. And that's why we're here every week, Glen, is to give everybody an update on the current state of the market. And I think we do a pretty good job about that. So let's rip into it. And of course, this is the week ending May the 8th. So we give all the data that's available this week. So everybody out there that's watching and listening can understand what's happening in real time in terms of the housing market and all its broader drivers, particularly in regard to the economy. So this week we're going to look at the latest national house and unit rent report, the My Housing Market April rent report, the latest RBA rate decision from yesterday, home building approvals, latest home building approvals, and of course the latest weekend auction results. So let's have a look at the rent report. Glen, of course, it's a cliche now, the rental crisis, etc., etc. We hear all about it, and lines of prospective tenants wherever you go, every capital city, just about, certainly the eastern seaboard ones, and also Perth and Adelaide. There are queues of people, waiting to put in an application for a vacant rental property. Not good, and rents have certainly been rising. Have been steepling. Can I use that word? Steepling over the last couple of years. Maybe some early signs of some relief. I really don't want to overstate this from the latest data, but certainly we had some mixed results over April. Vacancy rates were eased a little bit. They're a little bit higher. They certainly remain low. Let's not get carried away here, and are continuing to favour landlords generally. But we've got to remember that it was a holiday month, of course, April. We've already alluded to that today. And so you get a little bit less demand coming through. Prospective tenants are sidetracked, have other things on their mind perhaps. And so maybe that's a reason for a little bit of an easing of vacancy rates over April, but nonetheless still a very tight situation. So here's the data. I think the real standout for me anyway was Sydney's now at $800 a week median asking rent for houses. So that's your median asking rent in Sydney, $800 a week. That's a big chunk out of your pay packet, surely. That's a 2.6% rise over the month. Of course, it's a record all-time high. Sydney rents up 12.7% over the year, and the vacancy rate at 0.9%, up a tick over the March results, but still very, very low. Anything under 2% favours landlords. Anything under 1% basically means there's just hardly any properties available for tenants. So a big result there for Sydney, $800 a week. Not that long ago, Glen, when we had Sydney at $500 a week median asking rent. So it's interesting. We sort of we move from month to month, period to period, with houses strong, and then units are strong, and houses are steady, and then units are steady. And I think it's a bit of a shifting in terms of affordability from houses to units from tenants. And maybe they're looking at houses in Sydney because there's more bedrooms, more space, so they can afford to spread that rent around, a little better. But and then maybe we shift back to units because they just can't afford that $800 a week or more for rent in Sydney. Melbourne house rents were flat over the month, up by 9% over the year. So Melbourne's still rising, rents are still rising annually. Again, a low vacancy rate there in Melbourne, 0.8%. Brisbane continues to rise. House rents in Brisbane up by 1.6% over the month, 11.8% higher over the year. Adelaide, similar to Melbourne, steady, 600 a week, 9.1% increase over the past year. All these vacancy rates for houses, Glen, are under 1%, with the exception of Canberra and now Hobart, which is just a tick over 1%. We shouldn't get too excited about 1.1% vacancy rates. Still very, very low. As I said before, 2% is the balance mark really between landlords and tenants, and we're half that at the best in Hobart and Canberra. So Perth down a little bit over the month, down by 1.5%, but still up 12.9% over the year. And the smaller markets, Hobart, Darwin and Canberra, faring a little bit better than the others, but still very tight rental markets in those smaller capital cities, Glen. But a bit of a horror story there for Sydney prospective tenants who are looking for a house. You've got to pay on average $800 a week to rent a house in Sydney. So, and as I said before, there'll be a queue. Regardless of the higher rents, there'll still be a queue of prospective tenants that you're open for inspections going forward. Similar scenarios for units over the month, Glen. The unit rental report, vacancy rates again a little higher over the month, but once again, and vacancy rates have been tracking higher for units than houses, which is what we typically see. They're now starting to push upwards, certainly still in the ones, but a little bit higher now. So maybe a tinge of hope there that we're getting more of a balanced market for unit rentals. But look, I wouldn't get too carried away. It is the holiday season, as I said, April. This is the April report, and particularly for units, you do get a lot of students are on holidays, reflecting on other issues over the breakdown period, and look, over the break period, and I think perhaps that's one of the reasons we've seen higher vacancy rates, particularly for units. But still, we're seeing upward pressure overall in units in terms of rents. Brisbane up 0.4%, Adelaide up 0.5%, Perth up 0.4%. Hobart down over the month, and we saw there Sydney, bit of a relief there for tenants in Sydney, with Sydney unit rents flat, but still big increases over the year in terms of unit rents. Melbourne up 16.3%, even though it was down 0.4% over the month. And that Melbourne rental market has really picked up, maybe a precursor for some improvement in the overall housing market in Melbourne, but certainly a lot of demand for Melbourne rentals, particularly unit rentals, even though it was a weaker month marginally over April. But Brisbane up 14.5% over the year, Adelaide up 14.9%, Perth up 10.1%. And interestingly, Sydney a bit of an underperformer there, still up 7.1%, but big double-figure results still occurring. And look, that can't be sustained, Glenn. This is the point. You can't keep pushing rents up annually by 10%. Eventually, we start to reach the plateau, which is all based on the fact that people just can't afford to keep paying 10% extra, year on year in their rentals. They just don't have the incomes for it. So this is where we're going to see, some changes. I think, big social changes, that people will stay at home longer. They'll have to share their rental accommodation or go further out, or we're talking about sharing. Maybe, those that would have preferred a house will have to look to a unit, even though it doesn't have the same sort of accommodation level. So look, some maybe early signs there of a steadying in our rental market. not so much in houses, but maybe more so for units with vacancy rates easing. But let's wait and see what happens over May, just to see if we can start to call perhaps some improvement and some relief for tenants in what is still a terrible, terrible rental market. If you're renting, not so bad if you're a landlord, of course, Glen, because it means higher rents and plenty of choices for your tenants going forward. So just in summary, those rental markets eased a little bit compared to last month over April, or compared to March. Conditions are still tight, high rents, low vacancy rates, and it may be those holiday distractions that gave a little bit of relief with those higher vacancy rates over April. But I still think that any of that sustained short-term relief for tenants will likely prove to be short-lived. But let's keep an eye on next month's results just to see whether it's a seasonal effect or whether there's just a bit more of a balance happening in rental markets. But as I said, Glenn, I think we're going to start to see, just because we're seeing, some higher vacancy rates and maybe not as strong growth in rents, doesn't mean everybody out there is a happy camper in terms of seeking rental accommodation. They might just have postponed it and are living with mum and dad for a bit longer, or else, taking other options. But the other thing, of course, we already alluded to that this week. The other big news was, of course, the RBA. The RBA had its first meeting since March. So this is part of the new environment, the new schedule for the RBA. It's not meeting every month. Of course, April's a bit of a holiday month, so you can understand perhaps not meeting there, not a lot happening. But again, it was interesting because April actually had some data that came through that sort of threw the cat amongst the pigeons a little bit in terms of the outlook for interest rates, particularly in the US, where a lot of the chat, which was a bit confounding about imminent interest rate cuts, and there were going to be 7 cuts this year, and there was a certainty that rates were going to be cut in February. Well, by gee, did those that were predicting that get that wrong hugely. Now they're talking maybe 1 cut this year, but you shouldn't listen to those if you're making investment decisions. Particularly, you shouldn't listen to those month by month commentary positions in terms of short-term interest rate outlooks. And if you take a position based on that, you can see what the flip-flopping can do in terms of how positive those decisions can be for you, given, as we've seen, big changes in the outlook for interest rates over the last 6 months. But the RBA, of course, has decided to leave rates on hold. I don't think there was any real chance that they were going to raise rates, even though we've certainly had some bad news in terms of inflation. Not super bad news, but certainly going in the wrong direction. So it was the 4th steady decision by the RBA. Of course, they raised rates last November. Similarly, when we did have a bit of an outbreak in inflation over the months prior to November, and the Reserve Bank stepped in, I think we'd have to have a couple more months with inflation rising for the Reserve Bank to think about increasing interest rates. I do think the next inflation number will be a little higher again, because we're still looking backwards in terms of the drivers of inflation. And if I could just give you a clue, of course, petrol's been a key, and we've discussed this often. Petrol's been a key driver of inflation, the price of oil. And the price, no surprise, the price of oil, as we've discussed here, has certainly risen over the last 4 months. And that's worked its way into higher inflation, not just in Australia, but also, of course, in the US. And that's been a significant part of the storyline in terms of changing their position on where interest rates are going. So we haven't been immune from that. But our next inflation data will be for April. And when we look at the price of oil, and we can do that, compare it to where it was last April, we're actually still 9% higher than last April. So that's going to feed itself into likely a higher inflation number again. So that'll really test the mettle of the Reserve Bank, which will be meeting in the middle of June next month, the middle of June. That's its next meeting. So it will likely have that inflation data to deal with. So for April, but Reserve Bank, on hold. The Reserve Bank governor had her press conference, and she was certainly not mixed about saying, yeah, we could raise rates, which sort of put the cat amongst the pigeons, as I said, in terms of saying, well, there is, don't discount the possibility that we will raise rates. She was clear about that. So, we can't put that off the agenda. It will depend on that data coming through. As I said, I think we'll get a higher inflation number next month. I'm not sure that'll be enough to get them to raise rates. We'll have to wait and see. But there are other positive signs going the other way. House building costs are falling. We'll look at that next week, Glenn. The latest house building costs, they're a little bit lower. Retail sales were slightly lower, but I'm not sure there's much in that in terms of the inflation outlook. But also we'll have the latest unemployment data to deal with for April when the Reserve Bank meets. So a few things to happen, moving a couple of ways. So, but of course, the big picture is, and really we shouldn't not focus on this because this is really the main game, and that's we have a very, very strong economy. All those interest rate rises, 13 since May 2022, so 2 years of interest rate increases, and we still have this super strong economy. Our unemployment rate still has a 3 in front of it. Can you believe? Overall jobs are still rising, unemployment numbers are falling, and the participation rate is still at near record highs. So really no significant sign there of a shakeout in our labour market. So that's what's really got to happen, Glenn. Okay, we're talking about supply here, supply of oil, supply of housing, etc. But it is fundamentally about demand as well. And the way we're going to reduce demand is, unfortunately, by pushing up unemployment. And, because that's the real disincentive for people to spend, not only if they lose their job, but once they start getting worried about job security, that's when we reduce demand. And that's been the story in all the outbreaks in inflation that we've had. We've had to have higher unemployment before we started to see lower inflation. Now, maybe we'll get lucky this time. They talk about the soft landing. Are we going to have a soft landing? I doubt it in terms of looking at history, but obviously we're moving into a very interesting phase. And, as I said, high interest rates have not done anything in terms of demand. And we're just waiting really for that readjustment of supply to give us relief from that high inflation. So we await the next inflation data, but rates are still likely to remain on hold. But higher inflation is a concern. But we're not going to throw the baby out with the bathwater after 1 month's results, even though it has been a bit of a trend emerging with flat inflation and then higher inflation. So, and as I said, I think there's a chance we'll see higher inflation again over April. But I still think the Reserve Bank will wait, particularly given the latest price data on oil is a bit more positive. In fact, the price of oil has now fallen below $80 US, which is a good sign. Still a bit high, but certainly below the near $90 US it was just a couple of months ago. And we all know that when we look at the price of petrol at the Bowser, so hopefully we're a bit of relief on that. But it's fraught with danger predicting where the oil price is going to go, believe me. And in the statement that the governor made on release of the decision yesterday, I think the key thing here is that the path of interest rates that will best ensure that inflation returns to target, which it's doing more slowly than they thought, remains uncertain. So they're just saying, well, we sort of don't know, and they're not ruling anything in or out. And as the governor has said today, they're quite prepared to raise interest rates if they need to. So, which I think is a good signal to make, and I think that is good to also the very fact that she's discussing higher interest rates maybe help people, curb some of their spending habits, which works in a positive way to reduce inflation. There's our cash rate. You can see that it's just topped out a little bit there into a steady period, as we've said, 4 months in a row at steady. And let's wait and see what the future holds. But look, again, we keep pointing out the rate's still below where it was in 2011-12 at its peak. So, really, and we started from zero. So, okay, 13 interest rate increases, yeah, but we started from zero and we're still below where we were at the peak of the previous rising cycle. And maybe that's got something to do why it's been a bit harder to quell inflation this time. But every cycle is different. And of course, we've had to deal with the COVID issues in terms of particularly the supply side. And that just shows you, in a way, I mentioned Australia maybe held their rates a little paused in periods where other jurisdictions, we've got New Zealand and the US there, were raising rates. So we just sort of created a bit more of a gap, particularly between us and the US. And maybe that means that, even if the US did cut its rates, which similarly to us is looking a little bit less likely now this year, I don't think we would necessarily follow straight, because our rates are still a lot lower than where the US are. In fact, they're over 1% lower than where the US are. So that's our economic update, Glen, on interest rates. Everybody's interested in that. Everybody's talking about that at the moment. But I wouldn't be, at this stage, I think it's been a little bit nonsensical to be talking about lower interest rate. Bit of clickbait happening there. So, steady as you goes is good news. If we did get an interest rate increase, it would impact confidence in the housing market short term. But I think the very fact that we're talking about it might just quell the impact of higher rates if they did come. And I'm certainly not predicting that. We really need to see the data over the next couple of months to take a position. And I'm sure that's what the Reserve Bank's thinking too. So some better news for our supply problems in our housing market. Home building approvals increased over March, following that February fall, up by 3.7%. That followed a 3.5% fall over March. It's interesting that from period to period, we can get high and low or volatile results with our building approvals. And that reflects the volatility of the unit market, because you can get a really big development coming through. A big apartment block is approved. We're talking thousands potentially. And that pushes, obviously, the results up 1 month. And then if you don't get the same big result the next month, it goes down, But it was interesting, this month was a little different, March, because units and houses were similarly up by 3.6% each. So it wasn't a real volatile outcome. But when we look at the data, it was really Victoria that led the charge, with houses up by, or total homes up by 3.2%. If we look a bit closer at the data, they were actually down in the other major states, the building approval data. So even though the headline number was a bit of an improvement, it really, when we looked a bit deeper, it was really all about Victoria rather than, and the others were actually still declining. And when we look at the annual growth trend for national building approvals, we can still see it's just bouncing along, at, I guess, hopefully the bottom of the cycle. And the quarterly trend is still falling, and we're really well below where we were for national home building approvals at that peak back in 2022. But of course, that was driven by that home builder allowance from the previous government. But really no signs, with the trend still falling, of a significant revival in home building. And of course, that's what we need, particularly in our rental market. But even if we did get it, it would take a long time to work its way through into the system, particularly, of course, for apartments, which even if we get an approval for an apartment, it's unlikely to become something to live in for a couple of years, So that's the jeopardy here. We need to see it all rising. So over the month, a consistent result there from houses and units, as I mentioned. Total up 3.7, units up 3.6, houses up 3.8. Over the year to date, we can see there that houses are up by 0.8%, unit up down by 4.8%, overall 1.2%. So when we look at the longer period comparisons, not good news there. That's why the trend is falling, that we're still declining over time. And you can see when we look at the full year results there, houses down by 9%, units down 14%, and overall 11.2% over the year so far, over the full year compared to the previous full year. So lots of work to be done. Let's hope that this is the start of a revival. We say that every time we get a positive result from building approvals, but nonetheless, the whole point is that our capital city building approval trend, and this is the annual cycle for building approvals from our capital cities, is overall 38.5% down since that peak way back in 2016. So that tells you the story of why we're undersupplied, why we have a tough rental market. And when we compare units with houses, we can see units have been the real underperformer. They're down by 56% capital city unit approvals since their peak in 2016. So they're basically halved. We're basically building half what we built back in 2016. A lot of that, of course, has gone through the system now. It's become live-in apartments, but we're still falling quite rapidly in terms of the annual trend for apartment approvals. And as I said, we need to see that lifting sharply soon, quickly, because even if they did, it won't translate into a live-in dwelling, for a couple of years. That's the problem, and we're still getting heaps of demand, migration, etc. Organic population growth. So we're going backwards in terms of being able to supply that, and even housing. The trend for housing steadied a little bit, but well down on its previous peak prior to COVID. The best performer over the year to date is Perth, quite strong, but the others, are still so. Only Sydney has been, a positive so far this year compared to the same period last year. Has been a positive performer, and a lot of that's been because of some significant unit development. So, and of course, as we always see, Melbourne is the top performer for capital city building approvals, well ahead of everywhere else for total approvals. Melbourne is certainly the epicenter for houses and also approving units. And Melbourne units have started to pick up as well. So perhaps that's the reason why Melbourne has a little bit more of an affordable housing market, although we are starting to see a significant tightening in the rental market in Melbourne, is because they have a better supply line. And Melbourne typically supplies around about 40% of all capital city home building approvals. So, maybe that's the story, part of the story why Melbourne's been a bit flat, that it has a better supply-demand balance going forward. So let's have a look at the latest weekend auction results. We've been pretty busy there with our rent report and our RBA report and our building approval report. So as usual, we'll finish off looking at the latest weekend auction results. So we've basically come back from our holiday month. Stable auction results, nothing to get sort of too worked up one way or the other. So that means actually quite positive results going forward, even though, as we mentioned at the start, there was a public holiday in Queensland last weekend, so numbers were a little bit lower. But certainly a feature of the market remains high listing numbers, Glen, particularly in Sydney and Melbourne. And we've had record numbers of auction listings over the year so far compared to the same period in other years. So that's over the first 4 months of the year. We've had record numbers of auction listings in Melbourne and Sydney. And that's translated into record numbers of auction sales, even though our clearance rates are starting to track a little bit lower than where they were a year ago. No surprise there, because remember, a year ago we had a boom time. We moved into a boom time market through April and through to August, as that market caught up, as our housing markets caught up with what they lost in 2022. So here are the results: 744 auctions in Sydney. Sydney's now refocusing after its holiday break, school holiday period. Good clearance rate in Sydney there, 74.9%. Good result there for Sydney. Certainly a seller's market still. But look at the difference, Glen, between Sydney compared to the same weekend last year. Nearly 200 more auctions conducted compared to the same weekend last year. Yeah, the clearance rate is lower, but as I said, considering we had so many more auctions, it's a very good result. So buyers are, the sellers are being able to match with buyers. That is a seller's result. And as I mentioned, we were really moving into a very strong part of the market in Sydney and the other markets a year ago. Melbourne, 985 auctions in Melbourne. So Melbourne's now back after its holiday hiatus. Similar clearance rate, a little bit lower, maybe reflecting those higher auction numbers in Melbourne. And we've spoken about Melbourne being a bit of an underperformer, really. And again, that sort of reflects itself in that clearance rate, which is reasonable, but certainly, a bit more balance between buyers and sellers. But again, look at the difference, Glen, between Melbourne's listings last weekend compared to the same weekend last year. 300 more than 300 auctions, nearly 50% more auctions. Yeah, and to still have that clearance rate, I think is pretty fair. But again, when we look back to a year ago, those lower auction listing numbers were translating into higher clearance rates, and we're going to see this differential now when we compare to a year ago clearance rates going forward, because we have a much steadier market. Listings down in Brisbane, no surprise, but on the holiday weekend, but clearance rates were a little bit higher. Adelaide, higher listings, a similar clearance rate. Adelaide, and it's well below where it was a year ago in terms of its clearance rate, which was 90% a year ago. Can you believe that red hot Adelaide market a year ago really was setting some records? And Canberra, yeah, look, down a little bit. Canberra, we've been heralding a revival in Canberra for a month or so now, but just had a bit of a slide backwards from its 60% plus results it's had recently, and well down on where it was a year ago. So need to keep a weather eye on that Canberra market. It has been improving. We have been saying, yeah, look, we think there's some good value. There is some good value in that Canberra market, and maybe that'll start to pick up, and that we were starting to see signs of it. So let's watch to see what happens over the next couple of weeks, or the end of the, or certainly through the remainder of the autumn selling season. We can see there Sydney holding its own this year so far, tracking below, but not too far below where it was a year ago. Melbourne certainly just started to decline, and well below where it was a year ago. After a steady result at the beginning to the year this year, Melbourne with the mid-60s. So again, we need to see if Melbourne can hold on to that 65% plus result in the next few weeks. Brisbane down, again, it's the same old story. Incredibly near record clearance rates in Brisbane a year ago. We never see Brisbane clearance rates really moving much above 50%. When we saw 70-80% results last year, it was quite remarkable. But that was all about that migration surge, which has created the price and rent boom in Brisbane and most of southeast Queensland over the last couple of years. So tracking at just under 60% Brisbane, which is not a bad result over May so far. And of course, that's last week's results. That's all we have for May. Adelaide down a little bit, but still a very strong market there in Adelaide, just under 80%. And as we mentioned, just fading a little bit last weekend, the Canberra market. So we need to keep an eye on that to see if it can continue to maintain what's been a reasonable improvement this year up until April. So let's wait and see what happens with that Canberra auction market. So if you want to get those latest auction results, get onto my LinkedIn account, Doc Andrew Wilson at LinkedIn. Saturday around 6:30, we send out the capital city snapshot, which gives you the clearance rates and listings for all the capital cities that have auction markets. And then the full national report, which gives regional breakdowns for Sydney and Melbourne, and also the top 10 sales for each of the capital cities. And that's released on my LinkedIn account at around about 9 o'clock every Sunday. So there's our latest weekend auction report. QR code, if you want a copy of that latest weekend auction market report, just that will take you to it, the QR code link. And as usual, Glen, and I know I can see how excited you are, we're going to finish off with the My Housing Market Infinity app, Suburb data app. So if you're interested in the property market, and who isn't, Glen? Nobody.
Very useful app.
We're
very
all
useful
interested.
App, Doc.
Yeah, and please stop hounding me for passwords. Get those passwords through Infinity. So there's the app.
You need to come through Infinity to get the password.
Do reach out. Go through Infinity. You know, it's no such thing as a free lunch, and this is a pretty big lunch, let me tell you. So there's
my favorite four-letter word starting with F, Doc. Free.
Free-ish. But so there's the QR code. You take a picture of that, it gets you the link to our wonderful app, which is a great app, and we're all on the improve. So look out for the next version of that, which is coming through, which will be directed. We'll have a part of it directed to investors, particularly. So there's some screenshots for our little app there. It's great on your phone. You can check out what's happening in every suburb in Australia that has data in real time, because it's updated daily. And we'll give you an example here. You can choose between price or rent. You can choose your region here from the state regions or the state capital city regions, if you know what I mean. Here we've picked the Sydney region. We've picked Blacktown as a suburb, so you can pick all the suburbs that have the data. type of property. You can pick a house, a townhouse, or a unit, and you can also filter it for the number of beds. How exciting! So what we've done here is we've looked at a house in Blacktown in Sydney, 5-bedder, and we've selected that, and that gives us the median house price. These are asking prices, so this is exactly what the market is telling you what it wants at the moment. So it's very interesting. It's not backdated sales data; it's real-time asking price data. So if you're selling, it's you can figure out what everybody is asking in your suburb, so you know what the market's doing. And we also have the high and the low price. So it's not just the median price, it's the high and the low price. So you can get a sense of the range of prices. So that helps you, if you feel you've got a better quality home, maybe you're more towards the high price than the median price. And it also tells you the number of listings. So that's good because it shows you how much competition there is in that particular market for property. Now, we also have the screenshot. You can do exactly the same thing for rents. So here we have the same breakdown for rents, 5-bedroom house in Blacktown. And you can see there we've got the median rent, the high rent, and the low rent, and the number of properties that are for rent. And no surprise, that's a little skinny, as it is everywhere in terms of property availability for rent. So I'll get onto that one next week. We're going to look at the latest home loan data. That gives us a bit of a forward indicator of what's happening in the housing market. Latest house building costs. And some interesting news there because house building costs are a key driver of inflation, as we've discussed. We're also going to look at now we've got the April rent report and the April house price report. We've published those. We can actually look at the investment returns. So let's have a look at the latest April investment returns. So that'll show us gross yields, gross capital growth, and total income from investment properties. Gross income inclusive of yields, rental yields, and capital growth. My voice has got a frog in it, so quick cough. And of course, we have the latest weekend auction results. So another big week in property, Glen. Again, we'll revisit this next week with all the latest data, all the latest insights in the housing market and the economy. So really a good little resource if you're in the market, and even if you're not in the market, it helps you understand going forward exactly what's happened. And it's very low. In fact, I don't think we have any clickbait at all in this story.
No, it's all informative, real-time data here. It's all good. Appreciate you bringing the data once again, Doc.
Good on you, mate. And there's our QR code for if you want to get a copy of this of the report, which has got the data in it. You can get a copy of that with that QR code. Just take a picture of that, and it'll take you to a link to today's report. So that's it. That's it, Glen. All good.
Beauty, Doc.
And we await with bated breath our next exciting episode in a week's time. Right.
Wonderful, Doc. Appreciate your time again, and we'll catch up again next week.
Yeah, good on you, Glen. Good to chat.
Have a great week.
And good luck out there, everybody.